Hui Shan, how do you think the environment could change if there is a Trump presidency? We all know that external growth is benefiting China. It's almost the last leg standing, if you will. If that is in question under a higher China tariffs regime, then how vulnerable does this make China's economy?
Right. I think right now exports are a major bright spot in the Chinese economy. And I think policymakers might want to be prepared. We are seeing tariff narratives not only in the U.S. but across other major trading partners of China's. So this is not going to be a sustainable driver of growth for China. So the policymakers need to think about domestic demand and focusing on something that's more persistent and sustainable for the growth outlook. We've done an extensive set of research. If Trump does win the election and impose a 60% tariff on China, as he has suggested, it could be a major downside growth risk to China, mainly through the uncertainty channel and financial condition tightening channel, not necessarily through the sort of trade channel per se, based on the 2018-2019 experience. And currency could face some pressure as well. So this is, 60% tariff, that's pretty high. And we think that the implication for the macroeconomy is significant.
Yeah, and so let's talk about the currency very quickly. 725.92 is where offshore is H's right now. And the framework here is, exports are probably the best thing China's economy's got going for it right now. But if we get in excess of 60% tariffs, then it's a different story. How much more competitive or lower can China, you think, afford to let their currency go to try and offset higher tariffs and to keep exports going? And I ask this in light of the other risk that the weaker your currency gets, or China's currency gets, it's just going to exacerbate money outflows from the country, and those have been significant.
Right. It is a bit of a tricky situation. I think if you look at 2019 experience, tariffs had a huge impact on currency. And if you use that experience as a template, that would imply a lot of weakening in the RMB. At the same time, as you're mentioning, situation is different now versus 2019. I think PBOC does worry about capital outflow pressure. So in that sense, we might not see as dramatic a change in the currency as we saw in 2019. And also, just looking at how competitive Chinese exports are right now, right? We have negative PPI for quite a while now versus other countries' high inflation. So on the real exchange rate basis, Chinese currency is already very competitive, and we don't really think that the PBOC need to depreciate the currency dramatically to offset the tariffs. Nonetheless, the direction seems to us RMB should be weakened. It's just not the same degree as in 2019 because we're in a different situation.